Broadcasting from Orchard Park, New York,
and Boca Raton, Florida,
it's the Freight 360 podcast. From freight broker sales tips to sports talk, this podcast is all about helping you grow as a freight broker. We're your hosts, Nate Cross
and Benjamin Kowalski.
Let's talk freight. All right. Welcome back for episode, 220? 220 of the Freight 360 podcast. We're, it's December by the time this drops on Friday. So happy December, everybody. Hope everyone had a great Thanksgiving and Black Friday. And keep sending us all your questions. We're going to get to a bunch of them in the final mile, which comes out on Tuesday. Leave us that review. Send us to all of your friends. Hit the subscribe button, like, share, comment, all that good stuff. And if you'd like to learn more about us and our training, check out the Freight Broker Basics course. It's a full-length, self-paced course taught by Ben and myself on how to start your brokerage and succeed. This episode is brought to you by Blue Book Services. Are you looking to quickly identify qualified sales prospects? Looking to develop trusted, sustainable business partnerships? Well, look no further. The Lumber Blue Book is an online directory and credit resource for the lumber and forest products industry, covering mills, manufacturers, wholesalers, and retailers. Their database has over 23,000 lumber companies, and they can be searched and segmented to develop sales and marketing campaigns. Members receive access to real-time credit and business info. To learn more, go to lumberbluebook.com and click Join today. That's lumberbluebook.com. All right. Ben, what's happening?
Trying to stay warm, man. It was like 55 degrees this morning. I was super cold.
We got
60 last night.
We got like 14 inches of snow in Buffalo on Monday night this week into Tuesday. Schools were shut down Tuesday. And they got them all cleared up today, man. I don't know. It is what it is. That's Buffalo in the fall, though, or winter.
Kids excited? They get to go build some snowmen?
Oh, yeah. They were loving it. It was like dark out on Monday, and they were like, we want to go play outside. And so my wife and I took them out for like 2 minutes. And mind you, it was like 35-mile-an-hour like wind, and it was snowing like 2 inches an hour. Like it was coming out pretty good. And I was like, all right, gotta go back in. It's dark out. It's pretty dangerous. I can't see you guys when you're more than 10 feet away. And they're like, no, we want to go out and play. But they got to play when it all passed through, and the sun rose the next day. So, yeah, man.
That's awesome. I do miss that a lot. The last time I was in Buffalo was during a snowstorm to go skiing in Peak. And I was probably closer to your kid's age than my age at this point in my life. But
Peak's cool, man. They got some golf courses there too. They used to have an upper and a lower golf course. They just closed one of them, so they're down to one. But I've stayed at like a chalet house there before on like a family trip. It's pretty cool. I like it there. So we got Cameron back with us from Valley Truck and Insurance. Cameron, how you doing, man?
What's happening? I'm good. I don't quite have snow, but we are in the mid-20s, so snow is on the way.
You're in the Northwest, right?
Yeah, Pacific Northwest, Spokane, Washington.
Okay. Yep.
Yeah,
Gotcha.
Eastern Washington.
Gotcha. All right. Well, good deal. Sports. Hey, at least the Bills can't lose this weekend because we're on a bye week. I'm just gonna leave it at that. You got anything else on sports? Because I don't have it in me today to talk.
Just excited that the Steelers showed up with a little bit of offense finally. It was the first over 400 yards offense, I think. It was like 56 games going back like 2019, like right when Matt Canada started. So they did pull off a win against the Bengals, and they still only scored about the same average points they did with Matt Canada. But
what was it, like 13-10 or something? It was low scoring for sure.
I think it was 16-13. I can't remember. I thought the Steelers had 16. Regardless, Not a huge scoring game, but showed some life. There's a little bit of hope that the season.
You guys are a wild card, man.
Yeah,
right?
See how it plays out. I mean, I think there's a whole lot of hope. And
I might have to get myself a terrible towel before the season's over.
My daughter had her Steeler tassel cap on this morning.
There you go. News, dude. Did you see the what came out of Washington? This like new department.
I did, and I read the details of it, but apparently, the Biden administration is doing something for like supply
the Office of Multimodal Freight Infrastructure and Policy, aka the FLOW program. Here's what I loved, and the tweets So like I saw this from Freight Caviar's newsletter this morning, like the condensed version of it, which has made it really easy to follow.
Yep.
But President Biden tweets, because of my economic plan, our supply chains are the strongest on record, with backlogs, bottlenecks, and shipping rates at a 25-year low. And then what was even better is Craig Fuller from FreightWaves responds, shipping rates, bottlenecks, and backlogs have collapsed due to one of the worst freight recessions in history. After all, freight is a commodity. I suspect Biden is unaware of this. The industry is experiencing a bloodbath. So yeah, I mean, here's the deal. Like I was telling you this before, Ben. I just taught a class at a college earlier, like right before this, for an hour and 15 minutes, and I was talking about supply chain logistics and freight. It's one of those things that like nobody knows about in detail unless you work in the industry, and nobody knew anything about it before COVID because they didn't have to deal with it, right?
For sure.
And
out of sight, out of mind.
Yeah, the average person probably thinks that Biden's tweet is correct, and Biden himself probably does not understand. You know, I'm sure he's probably got some advisors that do, but he doesn't understand like what's going on here. And for him to tweet that, I mean, it's probably a smart move politically to try to take
For sure.
responsibility for something like low shipping rates.
Exactly.
But the reality is no. Interest rates are high. People aren't buying as much. They're spending their money in different ways. And you got companies going out of business. And it's just prices are down for that reason. And it's all gone.
I will say this, though, that I did read some of the details of it when it came out from a few other places. And a lot of that funding was going to some individual companies that were going to increase things for certain reasons. I did also see that a lot of that funding was also going to some of the infrastructure in the U.S. And I can't speak to the specifics, but I'm like, I mean, I grew up in Pittsburgh. Like, I think the average grade of a bridge in Pittsburgh right now is like C or D, right? Just because they haven't spent money on these anywhere in the country in like 60 or 70 years. I mean, one of them collapsed in Pittsburgh fairly recently last year. There's lots of issues all over the country related to that. So no matter what somebody's trying to take credit for in whatever news cycle, I care a lot less about than if they're actually going to allocate some resources to repairing roads. And I mean, like one of the tunnels, I think I read, they were repairing a tunnel because of this funding that was built in 1880 and had not had anything done to it since then, right? And it was just, I mean, it's like literally over 100 years they have not spent money on some of these things. And like, yeah, they function, but for sure it's costing truckers money. Dean used to talk about on the show, just potholes, maintenance on your truck because of the wear and tear on the road. So whatever comes of it, hopefully some of this money gets to where it needs to go at the end of the day.
Agreed. Another one, I had to pull up the president's Twitter feed because I wanted to see what else he said about it. And he said, on Thanksgiving 2 years ago, 100 container ships were waiting to dock at U.S. ports. This year, there were less than 10. So as families start their holiday shopping, shelves are stocked. And that's no accident. It all comes down to supply chains. No, I'm pretty sure nothing that I don't think it's anything that his presidency or anything has done that's been impacting it. But again, if you're the president,
well, hey, let me ask you this. I don't want to go on a tangent on this, but weren't they really heavily involved in the strikes on the West Coast and the labor issues that caused a lot of the bottlenecks in addition to what the pandemic was doing? I mean, I vaguely recall a lot of involvement related to that, but do either of you guys remember that?
Oh yeah,
I don't remember.
Like a perfect storm.
Who was striking?
Well, it was the
dock or like the port workers.
Yeah, there was. I really wish I would have.
Okay, I will say one thing that he did was he changed or he put like a lift on the regulations that basically prevented 24-hour operations.
Yes.
But you can't just create new dock workers out of thin air. They have to sleep.
No, but what was happening were the shifts and the things were causing more congestion issues because of labor. And I think the way they had their schedules was creating some of it, and they weren't flexible enough to allow it to be eased in some ways. I really wish I would have kind of prepared this for the fact that I did just bring it up, and I don't remember, but
I just thought so. But either way, I think what's cool is back to the original article that they've created this new, what would you call it? It's a new office. It's a new part of the government.
Makes me excited. FMCSA hasn't done shit, and you've been there, and you've been talking to them. So I'm like, hey, if they're going to allocate some money to anything logistics related, maybe we'll get some enforcement on something.
Yeah, here's what it says. I'll read this off. Introducing the Office of Multimodal Freight Infrastructure and Policy, the latest initiative under the Biden-Harris administration targets strengthening America's supply chains. The office is a central element of the comprehensive Freight Logistics Operation Works (FLOW) program, which aims to streamline the flow of goods and reduce consumer costs by enhancing supply chain transparency and cooperation among key stakeholders. Okay.
And you were right on the other one. I did also look up what was the government's involvement in the congestion in early 2020. And it said, yes, there was. There gave me a couple bullet points. Waiving certain regulations that allowed the ports to operate 24/7, providing grants to the port to help them expand capacity and improve efficiency. They established the Port Infrastructure Development Coalition, which coordinated federal, state, and local efforts to improve the infrastructure. And they worked with labor unions to resolve the disputes that were also slowing down cargo movement.
Gotcha.
So there were
okay.
a few things.
That makes sense. So it says, back to the flow part, so this is some of the stuff they've done. Flow milestones, leveraging the partnership of major U.S. ports and retailers. Flow facilitates the collaborative approach to preempt supply chain disruptions. I'm not sure how they do that, but that would be, if they can perfect the kind of like seeing it before it happens and doing something about it, that's awesome. And then investment in infrastructure. A record $17 billion from the bipartisan infrastructure law is allocated for port and waterway improvement. So that could be beneficial as well. So good deal.
Hey. That's a big project and undertaking, along with trying to electrify America too. So there's a lot of moving parts. So hopefully they're good stewards and GCs on these projects. That'll be interesting to watch.
Yeah. Oh yeah. I mean, realistically, with the amount that we import, it's like we're the largest importer. I think we're the largest importer by value of goods on an annual basis. The United States, with the amount of stuff that we import and also that we export, if we don't have state of the art top line port facilities and infrastructure, we're kind of one of the causes of a potential supply chain disruption if we're not doing that. It's kind of like the Ben, we talk about a brokerage that'll fail from indigestion versus starvation. It's kind of that same thing. Like you can't squeeze too much through a port that's not able to handle it and put it at its,
for sure,
its capacity. So
I saw those numbers recently. I'm trying to find them. I saw them in the past week that showed all of the countries and who is the biggest importers and exporters. I was trying to find it quickly, but
that'd be interesting. I always look when I do travel around the world. So we were in South Korea, is look at their exports, right? And look at the different countries on what they import, export, and what makes them run. It's always interesting.
I think I got it right here from this little college class I just taught.
Oh, there you go.
Oh, it's in a very small PowerPoint. Let's see if I got I don't know. Wait, do I have it open still? I do. Okay. The world's largest importers, top 10 countries. Number 1, United States. So this is 13 out of we're 13.2% of the pie, essentially. China is behind us. And other big ones are Germany, and then they all become very small. Well, Japan, but now Netherlands are down to the 3%. Below that, it's all kind of smaller. But Hong Kong's separate from China technically, right? And if you combined Hong Kong is separate from China. If you combine them, they would equal the United States as imports. But those are your two big ones, is U.S., China, and then no one else is really close. Germany, no one else is really close. It's your big economies, you know what I mean?
Yeah. So, I also, in the news, I don't know if you guys saw this, but Charlie Munger passed away at 99, Warren Buffett's long-term associate.
Really?
And helping him build Berkshire Hathaway for, I think he took the job in 78. But for anybody out there that is looking or likes little nuggets of wisdom from somebody that is incredibly intelligent and a very, very good writer, take a look at anything Charlie Munger has ever written. Books are great. Everything he's ever written is very, very concise, very direct, and kind of folksy, but really, really, really worth taking a look at if you haven't seen anything. Or
Yeah, he was a
man,
huge
that's a
part
hell
of
of a
their
run.
success.
Yeah.
For the investment strategies, and I feel like he articulates it really well, like you're saying, what he puts across. And one of the books I read, Hundred Bagger, for investments and stuff, him and Warren Buffett are obviously big examples in that book because they've just hit so many consistent bets, if you will.
Wow.
For sure. And I mean, they both attribute one thing above everything else: patience. There's a famous saying by both of them. I'll paraphrase, but it was like, everybody wants to get rich quick, but it's a lot easier to get rich slow. Nobody has the patience and nobody wants to.
Yep.
Here's his quote that they put it: "The big money is not in the money and it's not in the selling, but it's in the waiting."
Yep.
There you go. So I would say time in the market versus timing the market, right?
Exactly. And they say the biggest rule is with compounding interest to not interrupt it. You put it in there and you leave it there and you don't touch it, right? Because it's growing on it itself, right?
There you go.
That's not very fun.
It is not.
It's definitely not
Most people don't do
exciting
it.
or sexy, that's for sure. Well, Ben, let's give a shout out to DAT and let's talk insurance.
Tired of struggling to find accurate rates and the right carriers for your freight? With DAT1, you can access more than 500 million posted loads and trucks every year. That's 3 times more capacity than any other load board. Plus, their integrated freight management system makes it easy to cover loads 24/7. They have the most trusted network of carriers, brokers, and shippers in the industry. You'll get real-time rates on every lane so you know exactly how much a shipment will cost before you commit to it. Plus, you get instant access to top bids from qualified carriers around the country. Get 10% off your first year of DAT1 when you visit the link in the show notes.
Absolutely. All right. Well, Cameron, you've been on with us before, but for anyone who didn't catch our last episode with you, give our listeners a quick rundown on who you are, what you do, your company, and anything like that. And then we're gonna pick your brain on some insurance stuff today.
Yeah, brother, I appreciate it. And thank you guys for having me on, man. It's always a good time. It's always fun. I love what you guys are doing and the waves you're making in the industry. So it's always fun to watch. So for those that don't know, I own Valley Trucking Insurance. And then we also run a podcast, which I think is actually how we met in the first place, was Get a Load of This Trucking podcast, which we don't talk about insurance, or very rarely do we. It's usually people doing cool things, which is how I found you guys. But we focus on trucking, transportation, freight brokerage, manufacturing, kind of anything that extends off of that industry is where we focus on. And we've got another agency that I own and as well that focuses on personal lines, P&C, and that kind of stuff. But it's completely separate. So
awesome.
Yeah,
so
man.
Valley Trucking Insurance. Got it. Ben, you got a whole bunch of bullet points here. And I think what is good here is we're going to try to cover some like basic 101 stuff. So anyone out there who's new into brokerage can get some basic knowledge. But we might toss in a couple of scenarios too and see what Cameron's got as far as a solution for us. But Ben, what do you got?
Yeah, so these are the most common questions we get. Compiled these so that we can go through and just make sure that we cover them all within one episode so that everybody in the future we can reference back to this. And I'm sure we'll do another one, but wanted to get as much of the normal questions, the 101 level questions that we get most
and
often. Right?
We've gotten them through our website, via email, through YouTube comments, all that stuff. You guys ask in the Facebook group, right? You guys ask questions. We'll try to get you answers one way or another.
Yep. So first one up, what does a freight brokerage general liability policy cover?
And I want to frame this too, because we talked about what you need to be a freight broker, and it's not legally required by the FMCSA to have a general liability or a GL policy, right? You've got to have a bond, but that's it. But a lot of your customers are going to want you to have a GL policy.
Right. So that was the question I should have led with, right? Is when do you need to get it and what does it cover you for, right? So as Nate pointed out, As a freight brokerage, the government doesn't require you to have this. Your license doesn't require you to have it. It is typically the agreement the shipper sends you, their transportation agreement, that has the wording that says you as a freight broker need to have general liability. Cameron, take it from there.
No,
What
I think
is it
that's
and
good.
what does it cover you?
And I think let's start and just expand a little bit on the most common insurance policies that a freight brokerage would get. That they're not required to. They got the 75,000 freight broker bond, which isn't enough when you actually need it, which is a whole nother episode and topic.
That's so true. That is so true.
It's funny.
It used to be 10K, right? Until MAP 21.
Which is wild. Yeah. Now it's, I mean, anyways. So general liability, we'll just rattle through these, then we'll dive into the GL question. Contingent cargo, and then contingent auto liability, or hired and non-owned auto liability, however you're going to refer to that. And then every now and then people get E&O or some professional liability. Maybe they'll get, first party coverage for cargo or some stuff like that. But to answer your question, the GL, it does not come into play a ton. And I think the biggest exposure, if you're looking from an insurance perspective, which is what I'm going to look from, is your like housekeeping, slips, trips, falls type exposure. That's what general liability will typically come into for a freight brokerage. However, most freight brokers, including everybody I know, either has a small office that never sees foot traffic, or they work out of their home. So then it's like, where's the big exposure there?
So question.
Yeah.
About that, right? So let's say I have a small office and say it's just my employees, right? What would that cover me? Would that cover me if one of my employees falls and tries to sue me, or anybody else that comes in, or just anybody in the property? Like, what does it actually protect me?
No, good question. And it would be, let's say you had a customer in the area or carrier in the area that wanted to come in, or just somebody off the street. That's who it's going to cover. Someone walking on your sidewalk and you guys didn't repair some cracks, or you were negligent on the condition of your property and somebody got hurt, causing injury to them. That's what it'll cover. Your employees is a different deal, right? They'll come under, workers' compensation or some sort of employee type coverage. So they won't sue you on the GL piece. And there's that opens up a whole conversation for employment practices liability and a bunch of wrongful termination, a bunch of things, which is not general liability. The one thing though that could come into play, especially with people that are active on social, maybe running advertising or getting out there quite a bit, could be the advertising and personal injury coverage, right? You said something that offended somebody or whatever the case may be, and they're trying to sue you. There would be or could be some coverage that drop down from the GL from that. Now, some policies will put the E&O or errors and omissions or professional liability in the general liability. Think of it where you're the professional, you're the freight brokerage, you have a customer that says, hey, I need to haul this tiger to this zoo, which is a normal zoo, but these goats to this petting zoo. You put the tiger in the truck that goes to the petting zoo, the goats to the normal zoo. That tiger kills somebody. That was your wrong, right? That was your bad for the professional exposure.
As the freight broker, though, is that liability not on the shipper that loaded the physical truck?
Maybe.
You could probably argue that there's multiple.
Maybe. Right. Yeah. Depends the orders that you gave. Maybe you gave the wrong orders, right? Or the wrong instructions, or you hired the wrong carrier. Let's say you're hauling a specialty item, ammunition, bees, livestock. I don't know. Could be a number of things. And you didn't vet correctly the carrier that's taking this item. They had no business hauling it. Something happens, and then there was some, loss due to it. That could fall under that E&O exposure. So,
well, that's a pretty big category. I mean, sent the wrong truck in and the wrong truck gets loaded. I mean, that's a pretty common error and omission within our industry, right? How often do you see claims related to that? Or,
well, probably not much, because how often does something come to fruition for a claim, right? Typically it's damaged goods, but the cargo arrived. Hey, this fell over, this was unwrapped, or this got wet, or whatever the case may be. It's not common that the load doesn't arrive, I guess it would be more common in that example with livestock, right? You got death in transit, right? That's a big deal. Well, carriers don't realize, but a lot of their insurance policies will not cover that. They got to come out of pocket for that head of cattle, sheep, whatever it could be. Bees, we all know, right? You got to haul them. You can't stop, especially if it's hot. Like, they'll die. Like, there's things like that could come back on the freight broker potentially if you guys didn't vet properly or did your due diligence according to whatever guidelines you guys set forth for yourselves. But most of the time it would fall on the carrier. A lot of the time it just could drag you into it though. There's potential.
So I think most people are thinking, or what I would ask as a new broker is like, okay, so my shipper requires me to get this. Is this an expensive policy to carry? What happens if I don't have it? I mean, and I know you can't give an idea of what it would cost because that includes lots of variables you don't know. But I mean, as it relates to most insurance policies, is a general liability expensive for a new freight brokerage to run?
No, it's probably your least expensive insurance policy. And you think of it, it's your least likely policy to get hit with the claim. It's not going to cost as much money.
Is it priced based off of like annual revenue, or what are some of the?
It depends, but that's one of the big ones. The two things that typically let's go three things that would typically impact the general liability, because you could have freight forwarders in there that actually have a premise or something, but it'll be gross revenue. It could be payroll. Think of employees. So obviously the higher the revenue, the more employees, the more exposure potentially. And then also it could be if you had a facility and let's say a shop or an office or whatever warehousing, it could go off area, square footage, that kind of deal.
Okay. Gotcha.
Okay. Let's transition into the second most asked question is contingent cargo. Again, for everyone out there, you get it for the same reason you would get GL. Your shipper is saying, we are requiring you, the freight brokerage, as our transportation provider, to have this amount in contingent cargo. What is contingent cargo? What does it cover? And what does it cost generally?
Yep. I think that is a more likely insurance product that somebody would need. What I would recommend is contingent cargo, contingent auto liability. Those are going to be the two big things that you'd probably get hit with most likely in a claim. Cargo being probably the most common because you're moving the actual cargo. So contingent cargo simply means it's contingent to pay if the motor carrier's cargo is inadequate, it's lapsed, it doesn't cover it. Maybe there's it's not enough coverage. It's basically going to come secondary after that motor carrier. So one of the common requirements for contingent cargo to come or kick into play is that the freight broker did their due diligence and confirmed they have a certificate of insurance on file that confirms that they adhere to what your requirements are in your motor carrier agreement, and that you did the due diligence to check that, right? And if you did all that and there's a claim and the motor carrier's insurance is not adequate, doesn't cover it, canceled, whatever the case may be, now your cargo coverage will kick in and cover your risk there to either pay for the goods, repay the shipper, whoever was in.
So the only time I've ever seen one pay out is when the insurance, I can't remember if it was revoked or lapsed mid-transit and something happened. I think that's something like that happened, but it was really, really, really weird. Yeah.
Yeah, and those are the main ones. It's kind of simple. Lapse in coverage, inadequate coverage, or coverage gaps. That policy didn't cover it for a reason, right?
Because we get this question a lot, and I think there's a lot of confusion between this, right? Because you've got the freight brokerage's insurance, right? Yeah. And you have the motor carriers, right? And oftentimes we get asked, well, I made sure my carrier, okay, well, here's an example. The load value is $250,000. It's a piece of equipment, right? And we get a very common question of, okay, my carrier has 100,000 or 150,000, we'll say, in cargo insurance. And then the broker goes, well, I have 100,000 in contingent. And if you add them together, that's 250. So this shipment is covered, right? And I want you to walk through for 101 level why that is not true and how each of these policies are structured and when they work and when they don't, because that's the biggest, I think, confusion we have.
Yeah, for sure. And that's pretty simple. So you get a customer, move X equipment from point A to point B, you find a carrier that can do it, you go under contract, get the load, accept it, sign the paperwork, bill of lading, get the DOT, all that. Your freight brokerage responsibility is to cover that load for the 250.
Mm-hmm.
You have 100K in contingent cargo. So we'll go back to the prior as contingent comes into play after The motor carrier. So the motor carrier is 150 in your scenario. And I guess that's probably a fair assumption. People would think, hey, there's 150, let's add 100. We got 250 because we're just going to stack it. They're just making up rules that they just made up. Like, no one told them this. They're just assuming. I could tell you that insurance is simply a transfer of risk, and it's a contract. You're literally signing a contract that states, I'm responsible for this, and I'm going to pay this premium to transfer my risk, and here's the risk, and here's what the insurance company agrees to. The trucking company's cargo is primary. They're the ones who accept the load gets loaded on their trailer, they hit the road, and something happens. Their insurance is the one that's going to respond initially. Now, they have 150K, so it'll cover up to 150K. Perfect. Mm-hmm. But what they're missing is they don't have that additional 100. Now, maybe the insurance carrier on the freight brokerage says, you know what, we're going to allow a drop down coverage because it was inadequate. But then what will happen is they're going to go back and say, freight broker, did you accept a load valued at 250? Yes. Did you verify that the carrier had adequate coverage per your contract of the 250? No, because you didn't, obviously. Or if you got the certificate, you omitted that. Like, you just looked over that. So they would maybe open a claim, but eventually they'll come back and say, hey, most likely, obviously every claim's different, but most likely, hey, claim denied. There was no coverage there. There's no grounds for coverage here. You're responsible for that 100K. Sorry. That's most likely what would happen.
I think there's where there's a lot of confusion, right? Is the shipper agreement is saying, hey, you're required to have this amount of insurance, freight brokerage, to be, because it's literally your freight brokerage in the agreement, right? It doesn't reference the carriers you are hiring. It's saying you need to have this insurance. So I think there's a lot of, to your point, false assumptions that means, hey, the insurance I get that's required by you, my customer, will cover their freight. It does not, right? In that scenario, this is why we talk about this a lot. The questions you've got to confirm for every load is you need them to tell you the load value. Like in an email, it should be in writing, and you should have that saved for sure. And you should not put that cargo on any truck that doesn't have cargo insurance that covers the whole load value. Full stop. There is no contingent cargo that helps. It is just whatever this load value is, the carrier you book has to have enough cargo insurance to cover that whole load value. If not, that load was not insured to the expectations of the customer, correct?
Well, and let's expand on that, because I get this a lot, obviously dealing with freight brokers and carriers, both, right? Let's say the carrier is having trouble getting, and let's extend the value up to $500,000, right? They can get up to 250, but they can't get to $500,000 because for whatever reason their insurance company says we don't offer that. Mm-hmm. That's where the freight brokers want to get the load moved, and they're like, you know what? I'll just put mine at $500,000, but they're still missing the extra 250 because the carrier's responds first. So typically the carriers, what I would recommend, or at least mine that I work with, it's like, hey, we'll get a one-time trip coverage, which some of the insurance companies like Great West and some of those do really well. They understand how trucking works. Okay, great. Boom. We'll charge you a couple $100. Go move the load. You're good to go. Or people can go secure it on their own from a third party. I know there's certain companies popping up that'll insure just a one-time trip cargo now. Primary but don't get it. They will still subrogate back against the trucking company, potentially depending on the claim. So if you book a $500,000 load for this piece of equipment, that piece of equipment just disappears, aka stolen or whatever, potentially an inside job or something like that. The insurance company is not just going to give $500,000 and just let it be. So they're going
to go to the carrier's insurance first.
It expands further, but you want to know how to read a certificate of insurance, understand what those coverages mean. Also understand that just because I show you two certs side by side, it is not identical coverage. Some things cover more than others. Not all insurance is created equal. Even though the numbers look the same to you, you just have to know what you're hauling. If you're specialized electronics, alcohol, meat, seafood, like there's certain things that should trigger more questions for you of your carriers.
I got a question. Well, first, I want to take a break here and give a shout out to our friends over at Lean Solutions Group. Is your freight brokerage hiring? You've got to check out Lean Solutions Group, the industry leader in nearshore staffing for logistics companies with offices in South America, Mexico, and the Philippines. They offer a wide range of roles from back office operations to web development and marketing. Partner with the best. Visit www.leangroup.com to learn more. All right, so my question is you were kind of hinting at commodities, and I had a situation a couple of years ago that involved frozen seafood, and the carrier had an exclusion on their policy, but we didn't know until we got to the whatever the claim on it was. It wasn't a huge claim, but there was some issue that there was partial loss of the seafood, and then we come to find out this carrier had an exclusion for seafood on their policy. When we look at an accord form, we see, we're vetting this carrier and we see dollar amounts and dates. What would your recommendation be for commodities? Is it just like, hey, know which commodities to look out for and ask about? Or is there another way to verify this kind of stuff?
Yeah, I mean, the only way to verify for like that specific example would be as like, hey, can I get a copy of your exclusions of your actual policy, right? And then you got to then read it, interpret it, figure it out. What I would recommend and what I do recommend when I'm talking to my freight brokers and motor carriers, I do try to educate them as well. Like, so you go back to your point, know what you're hauling or the value. We train those guys on that too. Like, just because the contract says 100K, it might be worth more. Find that out, ask or understand what you're hauling. If you're hauling something specialized, and hopefully the insurance professional you're working with or you're communicating with your insurance, hey, I'm thinking about hauling this. So one of the things that I ask of like my people that I work with is I need you to communicate openly and tell me what you're going to do. So when we're talking either quarterly or maybe at renewal or whatever the case is, hey, are you doing the same thing you were doing last year, aka hauling potatoes, or are you now hauling potatoes and logs, and what are we doing? I need to know what your plan is. What are you doing? Because the market evolves, money evolves. There's money over here, money over there. People are like, hey, I could do that. I got the relationships. So a lot of people just do it and then forget to tell their insurance or ask. And I just recommend that if it's something that's brand new, just simply just send a note to your insurance and say, hey, I'm looking at doing this. Does my insurance cover it? Am I covered for this? That should then trigger a response out of you to say, holy cow, they asked a bunch more questions about this. So maybe I should then think and say, you know what, maybe the motor carriers need to have certain coverages, or I should ask certain things of them. And you could just ask your insurance, hey, what should I ask of a motor carrier? And then they should be able to give you a little bit of guidance on that. So
the other question I want to ask, which comes up a lot, is a similar scenario, right? Where, carriers move a lot of different freight in the spot market, especially in the market we're in right now, right? They got to grab what loads are there and where they can to get home. And it's changing a lot. So that does add complexity to that. But on the other hand, right, I see a really common thing with shippers, right? Because most of the people, definitely not all, but as a generalization, a lot of the people tendering the freight out of a company are their lower, more entry-level employees into that department, right? Because analysts, then they'll tender loads, then they go up to director and do other things within logistics, right? So it is very common in our industry for you to be getting loads from somebody that might have been in that job for 6 or 7 months, right? And I can't tell you how many times I've seen this, and I know the clients have seen it, where it's just like assumed load value. And the person sending out the loads like, yeah, I'm pretty sure they're all the same. Like, we're good. You don't need any more insurance. And then all of a sudden, to your point, a load disappears or there's a claim and somebody goes, wait a minute, this load was $225,000. I thought these were all $80,000 loads. And then they come to find out, oh, it looked like the same load, but this wasn't normal lumber. This was Russian hardwood that was imported, that was semi-finished, and the load value was 2.5 times. The freight broker didn't know. So then the carrier doesn't have the right insurance. What happens in these scenarios? I mean, does the onus fall on the shipper for not telling the broker, or does the freight broker responsible for not asking and verifying before they book the truck?
I mean, it kind of falls on all parties, because I think it would be the chain of command and due diligence from each person, right? So the freight broker would need to slow down and understand what they're shipping. The carrier would need to basically understand what they're hauling. And then the shipper should have known and had some form of verifying or like ensuring that, hey, this is a special higher valued load than what we typically do. Let's make sure those are in place. So that's it kind of falls on all parties there, in my
Yeah,
opinion.
we had, so Ben, I think I've told you this story. We had a load maybe a year ago where it ended up falling on all three parties, shipper, broker, and carrier, because it was something that had to be temperature controlled, and it ended up going on a dry van. The shipper loaded it knowing it was the wrong equipment. The broker requested the wrong equipment, and the driver
Loaded it.
accepted
The
it
wrong
knowing that
equipment.
it was the wrong equipment. So all three parties
Yep.
took an equal third on it. The load. The loss wasn't full. It was like maybe an $8,000 loss, but we all ate like a couple grand.
But here's the point, right? I think the lesson or the takeaway, at least from the way I see it, is as a freight broker, I just want to cover my own ass. And I'm going to do that by asking every single load I ever get, if I don't have the load value, a 3-second email of confirm load value when you get a chance, right? All they got to do is send an email back with the number in it. It doesn't have to be an explanation. You don't need a paragraph. You just need to have in writing documentation that they've told you what that is, because now even if that person was wrong, I've at least covered my ass, and I've at least covered my due diligence on making sure my carrier has the right insurance for what was stated to me. And that's as much as I'm ever going to be able to do, right? I can't do their job for them. So for me, it's more, I think you do the things that can protect your risk and your own liability in these scenarios, regardless if somebody isn't doing what they should. You should be making sure that you've covered yours. And it's an easy thing to do, right? It's not a huge
lift. Redlined contracts that state like, must have insurance at $150,000 on all loads. And we'll redline it saying like all loads must, we'll add in like all loads or all tenders must include freight
load
shipment value.
Yeah.
So, good stuff. What else we got?
Okay. How to secure a bond for a shipment. And is this the same as insurance? When do you use them? How do you get them? When do you see bonded shipments come into play?
That was a really good question. And I'm glad that you asked me that, because it kind of opens up some stuff who I've dealt with in the past. And I think it's more common in international overseas type loads.
For sure. In international.
Yeah. Where people will get
Very
a bond
often
to ensure that it gets there, which is different from insurance because it's a bond or a surety. It's not the same as insurance. A bond, basically, you will purchase from, think of Travelers. The companies would come up as Old Republic, Travelers, and some of those would front the bond, basically guaranteeing that this load's going to get from point A to point B. If it doesn't, the bond will then pick up and either pay to get it there or pay the actual amount that it was supposed to be getting there. It's not a common thing I come across. I never get asked for it. It's not something I've done a ton of in my career, but you can get it, and it is different from insurance.
I've seen them a lot, like you said, in international where they're bonded warehouses. And the purpose that I've seen them in practice is because they don't want to open the cargo. So it can then be shipped across border without having to be inspected. And then when it's opened at the bonded warehouse in the other country, it's cleared. So it's almost like you get to skip customs because you're delivering it to a bonded warehouse that has somehow the authority to then open it and take that risk back.
Yeah, and a bond in just simplicity terms, let's go to the freight brokerage bond. That $75K is a promise or your word that this company has the ability to fulfill the agreements to the customers, the public, consumer.
Financial guarantee, essentially.
Yeah, it's just a financial guarantee. It's basically like, hey, my word is my bond, and like I can pay this. And let's say you're a freight broker, you're shady, all of a sudden you're going out of business, and all of a sudden all my customers need their money. Well, then they come in and it's first one to file claim to the bond, and then they start allocating percentages of the bond, and next thing you know, your $75K is gone like that, and then everybody's left holding an empty bag after the fact. So
yeah, that's interesting. So bonded shipment, because Ben, I'm with you. I've heard of it with like international stuff, but
airports are real common.
Cameron, can you give? I mean, you gave a vague example. Can you dig into that more?
I don't have a ton of specifics because it's not something I've done, to be honest. I mean, I could find out more and get some info back, but it was literally like, can we do it? Yes. Can you do it through these
I'm curious, and if you don't know the answer, this is fine. But let's say a bonded shipment, and it's going from U.S. to, I don't know, South America, and let's say it goes down to Mexico and gets stopped somewhere, right? The bond guarantees that it'll pay if necessary to get it to where it's going.
So that's my understanding, and like once again, I'm not like 100% like, hey, this is an ironclad on this. So this one is like definitely check with the bond or the company. But my understanding is basically like, hey, this is not insurance, but rather a guarantee that the bond will pay to either get that load there, right? Like let's say it got stopped or was unable to fulfill because of equipment issues or whatever the case is, they can help then facilitate it again. Or if it doesn't get there, they guarantee the payment of that.
There's also like your customs fees, like your import fees too, like tariffs.
I don't know how that all applies on that. So
who knows? Maybe we'll have to get a bond expert in here, Ben.
Yeah.
Yeah, or at the very least, a customs brokerage would be a good, I think, episode on that whole process. But
it's got a recommendation, let us know.
Yeah.
What else?
Last question I wanted to ask too was, okay, reading through a shipper and carrier agreement, right? How does a freight broker determine which coverages they need to make sure the carrier has, and how do they know which coverages are referring to the freight brokerage?
Yeah, so I think it starts with the shipper, right? The shipper comes back, you get a contract or go under agreement or get a new customer, and they say, hey, you need GL. And this is all just some attorney or boiler template thing that they pulled up. Hey, you need GL, cargo, maybe some liability there. That's typically where the freight broker gets their information and says, oh, I need this because someone's asking. Think of chain of command. So the freight broker definitely needs the insurance if it's their customer or shipper, right? The shipper doesn't deal typically with the carrier directly unless they've got a contract. So it goes from shipper to the freight broker's responsibility, even though the carrier's picking it up, and it's on that freight broker to ensure that the load gets done. Now, the freight broker's contract will then state to the carrier, you have adequate amount of coverage you're authorized to run, which FMCSA basically self-regulates that, right? You're required 750K liability in this, but most people require $1 million. What's happening is, and this is when it comes into play, this is why that contingent auto is so important, is if there's a catastrophic event with a nuclear verdict and all of a sudden there's a $20 million lawsuit, they're dragging every single party involved in that transaction into that claim. Attorneys are looking for money somewhere, right? Doesn't matter where. You don't have to even be negligent, found at fault. Does not matter. You could still get dragged into court, have to defend yourself, and still have some damages due to that, which is why those liability limits are so important, right? $1 million won't obviously cover that, but you can at least have defense cost up there to at least get you out of it if you're not responsible. So that's where that kind of comes into play. So shipper, freight broker to carrier. Ultimately, the carrier picks it up. They're responsible for it. So the freight broker has to go against them, get their funds, and then recoup and give it back to the shipper if they were damaged.
The last thing I'll add in there, Ben, for anyone listening, because a lot of times this is more contract related. Brokers will be asked to sign a carrier agreement, and they should be redlining that to change the wording to broker, right? Because when it says something like, hey, you're going to have cargo insurance and auto liability. Well, I'm not a motor carrier. I don't have those policies. I can have contingent, or we can reword it that I will only contract third-party carriers that possess that type of insurance policy.
That's what I was getting at. Yep.
Yeah.
Because that's where I look when I see them, is I very specifically look at the words of whether it's saying that we as the transportation provider need to have it, or if we need to make sure the carriers we source need to have it. And it's really important, right? Because it also tells you a little bit more about their load values, because if there's a big number there, my next question back to this customer, or hopefully soon to be a customer, is, hey, what are your average load volumes or load values, right? You're requiring me to have 250,000 in insurance. Are most of your loads valued at 250? Is it 10% of your loads? Is it 1 in 100? Because there are shippers, right, that have most of their loads are 70 grand and they ship one load a month that's 250, and they require all their carriers to have 250 because they just want to protect themselves. That's okay, but you want to understand that so that you can properly service them, right? Because to Cameron's point, as a freight broker, I can now have insurance that covers most of it, make sure my carriers cover most of it, and just make sure that they let me know when that load exceeds the 100K. I can go to a third-party company like LoadShore and get a trip policy that covers that, make sure they're good without having to increase my overall, insurance exposure to this high number that only happens occasionally.
Yep. The other thing I would say too, I would just add, and I get this more than I care to admit, is the best time to read that contract is not after you signed it.
Yeah,
like,
for sure.
Yeah, it better not be after a claim happens, right?
Well, and that's when I typically sometimes hear about those things. And you also, that contract is not ironclad or like set in stone either. You can request that they redline, change verbiage, like push back. A lot of places will throw it out there, and if you give it to them, they'll take it. But sure. if you push back with sensibility there, and you're like, hey, this doesn't even apply. Why would I cover you for this when that's they'll say, good point, strike it out. They won't give it to you, but if you ask, they will. Not always, but a lot of the time.
Gotcha. Well, and I think that goes to a bigger point that we didn't talk about, probably should have led with, is this is why you should really have somebody you trust to work with when you're buying insurance, right? Not just randomly getting what you get quoted from people you've never talked to or from a website. To me, the biggest risk I have with insurance is I want to make sure it pays when I need it. And I want to know that the person I'm talking to, I trust enough that I value their opinion. I'm still going to read the contract, to your point, but I don't want to have to read it with an eye that I'm looking at every single detail because I don't know where I'm actually getting the policy from. So to me, that's why the relationship with your insurance broker is really important. And using somebody you know and trust is really valuable, because when the proverbial shit hits the fan, you don't want to call a 1-800 number. You want to be able to call a person that you know that can help walk you through this. Because to me, that's the whole value of the policy in the first place. Hold my hand through the crazy shit we got to deal with when it comes to a claim, and making sure that we're getting everything we need. And then if I got to pay out of pocket, I know that I've got somebody that's been through this, can tell me point blank, this is how it's likely to play out. We don't know for sure, but based on my experience, this is what you can expect. To me, that's worth half of the policy in and of itself.
Yeah, agreed. And it's tough because with the market today, people can buy insurance online. They click some buttons, it gets cheaper, gets more expensive. Yep. They find the right price they want with their price gun, and then they buy it, not really knowing what they bought. And the last thing you want to do is find out you have bad insurance by accident or having an accident. It's like, oh, shit, I'm not covered. Or, I'm glad I saved that $2,000. I really hope you know what I mean? So
yeah. Oh, yeah.
It's like that old saying, cutting off your nose to spite your face. Yeah, I saved $600 a year. And then when I needed it, I had to lose $35,000. Didn't actually save you any money in the long run.
And insurance won't cover everything. I think people have that misconception too, that you can get insurance for everything. And to your credit, if you pay enough, you probably can, but you're really just front loading money into something that may or may not pay out. Your best insurance is you doing due diligence, setting up your contract correctly, taking the extra 2 minutes to ask those questions of your shipper, right? What's the value? Those type of things, vetting the carriers. Like, your best insurance policy is yourself, your process, your procedures, and like setting it up to protect you. It's not the insurance that will help, and that's transferring the risk, but like help yourself too, right?
For sure. Well, good discussion. Cameron Pechia. Did I say it right? Pechia, right?
Pechia, close.
Pechia.
And I don't even know if that's right. Who knows? That's what they told me at some point.
What is that? What's the heritage on that?
Also, who knows? I need to do a 23andMe, but I'm told.
DNA.
Oh, I know. I'm told that it's like we're French, German, and Italian. So I'll take Italian out of that because it looks most Italian, and just say that it's there.
There you go. So. Cameron Pechia with Valley Trucking Insurance, Spokane, Washington.
How can they get a hold of you,
man,
Cameron?
we appreciate you being on. Ben, you got anything else you want to?
No, just go let Cameron plug how they can get a hold of him.
Yeah.
I would say LinkedIn's a good spot. You can go to the website, valleytruckinginsurance.com, or if you guys want to like just follow more, which is just general, like awesome information, is Get a Load of This Trucking podcast on pretty much all the major platforms. So
awesome.
Yeah, man.
Well, good deal, man. We appreciate you coming on. We'll definitely we'll have to do another insurance discussion in the future. Ben.
Sounds good.
Final thoughts.
Yeah, it's a little in memory of Charlie Munger. I'll end with a quote from him. It's so simple. You spend less than you earn. You invest shrewdly. Avoid toxic people and toxic activities. Try to keep learning all your life and do a lot of deferred gratification. If you do all those things, you're almost certain to succeed. And if you don't, you're going to need a lot of luck. And you don't want to need a lot of luck. You want to go into a game where you're very likely to win without having to have unusual luck. Charlie Munger.
All right. Good deal. Anything else, Ben?
Whether you believe you can or believe you can't, you're right.
And until next time, well, we'll see you next time. That wraps up this episode of Freight 360. Check out the show notes for links to anything that we've referenced on this episode. And make sure to visit us online at freight360.net to see our entire library of episodes, videos, blogs, and more.
And make sure to check us out on Facebook and subscribe to our YouTube channel for daily and weekly tips and content. And if you'd like your question answered on the show, fill out the Contact Us form on our site, and we'll see you next week.